we'll eventually, we'll produce this episode, of course. We will probably actually publish it, I would think, in a week or so, maybe a week and a half. Of course, once we do, we'll tag you and blast it everywhere. Also, we'll find social media. We'll carve up the episode to find like these magic moments, and we'll also push out these short form videos probably a month from now, and try to reignite interest in it. So that'll be a lot of fun. But okay, we are good. Make sure I have all my stuff turned on, and here we go. Okay, there we go. Eventually, I'll put a proper intro, but we'll just dive right into the conversation right now. Okay, today on the show, we have respected expert in fair and responsible lending, Anna DeSimone. Let me tell you more about Anna. Now, Anna DeSimone is the author of the newest book, Closing the Gap in Homeownership, Rewriting the Rules Against Mortgage Discrimination. She is the winner of 5 National Book Awards. Anna lights the way for helping consumers make informed decisions in the buying, financing, or renovating their home. She's the author of Live in a Home That Pays You Back, Welcome to the Agrihood, and Housing Finance 2020, which is also available in Spanish. She's a nationally respected authority on the topic of fair lending and has written more than 45 compliance handbooks used by thousands of banking industry professionals throughout the country. Her publishers, this is amazing. Her publishers include Fannie Mae and Freddie Mac, and she was also named one of Housing Wire's Women of Influence. I want you to check out her website because it's chock full of great information. It is annadesimone.net, and that is ANNADESIMONE.net. We'll have a link to that in the show notes. Anna, welcome to the show.
Oh, thank you so much. I'm thrilled to be talking to an audience of realtors.
Oh, good. Yeah, well, that's our audience, so that's good.
Yeah. I know.
I got the right guess. This is fantastic.
Yeah, I'm excited about that.
Well, I'm excited to chat with you because I have to be honest, I don't always totally understand what the homeownership gap is. So, but before we get into sort of that topic and your newest book, I'd love to just learn more about you. And you have a long and very impressive storied career in this industry. So please tell us a little bit more about how you got started and what your career has looked like.
Okay, well, I had a long career. I'm a grandma. And so I was a banker. And when I was working, it was before computerization, fax machines. And I did a lot. I was a training director. And because I was doing so much training, I was doing a lot of writing. And then the Mortgage Bankers Association of America asked me to start doing some writing for them. So I ended up writing about a dozen publications for the MBA of America. And so early on in my career, I did a lot of work for the Boston Federal Bank, the Federal Reserve Bank of Boston, and they sent me down to Louisiana for 30 days. I lived in a hotel to do fair lending training. And at that same time, the MBA of America asked me to write a series of handbooks on fair lending that were commissioned by President Clinton. So all of this was about 30 years ago. And so one of the reasons why I decided to write this book is because not much has happened in the past 30 years. And I have to say that, in my capacity, I owned a company that specialized in auditing. And we completed what we call side-by-side analysis. So we would take Black borrowers who were denied for a loan and compare them to the service standards and the loans, the interest rates that they would be charging to white borrowers. So you got to understand, we did this for banks and mortgage lenders covering 50 states. I had 25 lawyers on my team, and we ended up auditing about 1 million loans.
And the idea was to look for inequity in various markets. Okay.
Yes. Yeah. And when you have that much data, we did this for a period. Actually, my company is still doing this. But what I want to say is I learned more from my students because I trained about 10,000 people on diversity and inclusion in banking and consumer products all over the country. So teaching in Arizona, I had a lot of Hispanic people in my class. Now, these were bankers and mortgage bankers. And then in Louisiana, I listened to the stories that my students shared. And so every time I came away from, I got off, my hometown is Boston. I would come back from doing a big fair lending training program, and I would say, the problem was minorities need to self-advocate. And then my staff and I would look at the data from our fair lending analysis, and we're saying, what is going on here? Why are these people walking away from these mortgages? They have good credit. They've got the money in the bank. Why are they getting denied? Or worse than that, why are they withdrawing their applications? And then I realized, and I have talked about this in the past, is they need to self-advocate. And so what you have in America is you have two types of buyers. You've got the first-time home buyer and you've got the first-generation home buyer. And the first-generation home buyer needs an advocate. They don't have people that can say, are you kidding me? This furnace hasn't been cleaned in 30 years. You can negotiate the price here a little bit. So why I'm happy to be speaking to an audience of realtors is because you are the frontline people that build up trust with your customer. And trust is so important, especially in a multicultural market where people are going to their grandparents and getting $20,000, $25,000 cash gifts from them. And no one is saying to them, your grandparent has to give you a copy of his bank statement. And this is why people walk away from their mortgages, is because we have become so overly reliant on technology that the computer isn't capturing these little nuances, like part of the funds is a gift. And so 3 weeks after someone applies, they're told, you're all set, you've got a good ratio, you're going to get approved. And then all of a sudden, after 3 weeks, they get a letter in the mail saying gift funds need to be sourced. And these people are saying, are we talking about organic oranges in California here? What are they talking about need to be sourced? And so what happens is realtors know the most common statement that disgruntled mortgage applicants make is, well, why didn't you tell me that in the first place? And so the more that we get into artificial intelligence, the more we utilize decision-based technology, and the more diverse our country becomes. I mean, the multiracial population has grown 276% in the past 10 years. And so we have to think about our customers, whoever they are, on a neighborhood by neighborhood basis. We need to share with them, not, oh yeah, you're definitely going to get approved for a mortgage, but we need to share with them what the process is and building up that trust. And that starts, and the pre-purchase, it starts when they're out looking at listings and they're calling you up and saying, I want to see 3 or 4 homes. And they say, what are the interest rates today? That's the first thing they ask. Do you think rates will come down? And my advice is explain to them, you got to look at the whole package. You got to see what home buyer grants are available. You have to see what incentives there are. And you have to see what kind of loan documentation there is. And even if the rate is a tiny bit higher, or maybe 1/4 or 0.5% higher, I want to tell you that the difference in the mortgage payment is offset by home appreciation rates that have been greater than 5% for 10 years in a row. And so if the area where you're selling homes is appreciating at a value of 10% a year, which it probably is, and you're selling homes that are valued $500,000, That's like your customers putting $1,000 a week in their secret nest egg every year that they live in that house. And the difference in 1% between a 6% mortgage and a 7% mortgage on a $500,000 loan is going to be a couple $100 a month.
Right.
No question about it. But when you compare that to $1,000 a month in the bank appreciation, it's almost like a passive income. And so I think that realtors play such a vital role in discussing building wealth through home equity and having them understand that, and also talking to them that the more they take care of their house, mowing the lawn, painting, fixing the fence, fixing the roof, that is what is going to put money in the bank for their retirement nest egg. They've got to take care of the house. And I think that realtors are frontline to be the advocate that mortgage customers need. And I have a whole chapter in my book called Find an Advocate.
I think that's really important. So you said so much there. I want to unpack a little bit of it. So you talked about, I mean, I'm still sort of getting caught because I'm very excited to this idea of creating sort of almost an annuity payment, invisible annuity, we'll call it, or passive income, as you mentioned, through just the natural appreciation that we've seen historically. But I want to go back to the beginning, and I want to really dial in the sort of two types of groups you were mentioning, which is first-time home buyers and then first-generation buyers. And we're talking about, of course, people coming to this country from somewhere else, or just being the first of their generation, in their family to ever purchase a home. So I think this is really important because as real estate professionals, we can go straight into the pre-approval. We just want to get the pre-approval letter, and we sort of maybe fail to think about, hey, this is the person's first time going through this process. And there's a financial literacy component that they aren't going to likely have as well down as you, the professional, because of course, they haven't done that before. And also there may be other reasons why. Maybe they moved from another country where it was done much differently, or maybe they just hadn't been exposed to lending. And so I think in my awareness of people who maybe don't have that financial literacy, and I know I didn't when I first bought my condo. I just trusted my lender to do everything. And I still don't exactly know what I was doing back then. I just, gave them whatever they needed. But I would have liked to have learned more. But more importantly, we have to remember that people also oftentimes aren't going to speak up on their own behalf and say, really want to understand. It can be seen as embarrassing to them or humiliating even to not maybe know the answer. I know that I didn't even understand how mortgages worked until I was in my late 20s. And I was embarrassed to ask them. And I'm like, I think I should know. And thankfully at that time we had the internet. I could just Google it and figure it out. But a lot of people, are just sort of suffer silently, and they don't feel confident enough to say, I don't know this. And so I think, I wanted just to really bring up this point that educating, as you were, sort of not so subtly saying, is educating your client, making sure they're aware, and really giving them a rundown of that process is something that I think sometimes we just take for granted to say, oh, they understand. But likely they may not. They're excited about getting the home. They might not be knowledgeable. So I just wanted to speak to that. Is this education process, how critical is it for the realtor and the lender to really, have that education with the client so that they really understand what they're getting into, so that maybe they can understand too that home appreciation may offset, like as you were saying, some of these, these rate changes in the market. Yesterday we were at 15-month lows, and I don't know where we're at today, but of course things bounce. 6.5 things, but things bounce around, and by next week, who knows where it is. And there's an election this year, and all sorts of things that could change that. But just kind of wanted to get your thoughts about the education process to the consumer, to the lender, the borrower. Sorry.
Yeah, it's more, financial education and home ownership education are different things. I mean, financial literacy is about maintaining a checking account and understanding your bills. Home buyer counseling is about the care and maintenance of your house and, the importance of making your payment on time and understanding the requirement for hazard insurance and escrows. But pre-purchase counseling is about the process of applying for a mortgage, getting approved for a mortgage, and the settlement process, understanding the fees and the charges. But I want to clarify that real estate agents, by law, they can't really cross that line and give mortgage advice because
Correct.
you know that you own a big company, and so they need to walk that tightrope to say, look, um, I'm only going to discuss with you the process. I can't recommend
Right.
whether you get a fixed rate or an adjustable rate, but I can try to give you some tips and understanding. But I think that the biggest part of the process that requires education is the approval process and the verification process. Well, let me just walk you through a typical scenario. The customer waits until the lender asks them for what documents they need to close to get approved. Where 90% of loans in America, you have to have a W 2 and a pay stub. 90% of the loans, you have to have 2 months bank statements. And so, what I've never been able to really get clear on, and I just want to go back and remind everyone that, we audited 1 million loan files across America. And we can see from the communication logs and the documentation checklist that the people were told, we need your pay stub. We're told we need your W 2 a week or 2 or 3 weeks after they applied for the loan. And what I'm saying is, you don't go on Zillow and say, what do I need to get approved on this? You don't go on Lending Tree or an aggregator, if you're shopping for rates. No one is going to tell you this is what you need. And so the mistake that consumers make, and I'm talking about people who are in a lower income, people that buy their first home, and I'm also talking about people that make $152,000 or $200,000 a year buying their second home. They take the path of least resistance and think, if they ask me for my tax returns, I'll give them my tax returns. But the problem is, when rates are fluctuating
Right.
and homes are selling at above asking, the homes are flying off the shelf. The pandemic taught us that.
Actually, can we pause for a second? Because I know you
Sure.
just recently sold your
Yeah.
home. And I was
Yeah.
only going to bring this up because you mentioned, and you don't have to
Yeah.
give any information other than
That's
this one
okay.
number. How quickly did your home just sell within the last, how much time?
The listing came out June 31st. And of course, I got the offer in a couple of hours, 45,000 over asking. And then on June 6th, we signed the contract, and that was the day my book came out on Amazon.
It's a good day.
I know, it was a great day. We signed the contract in Connecticut and New England. You have to put 10% down on a house, and I sold my townhouse for 1.2 million, and so the buyer put down $125,000. But we also have a very fluky condo rule. I was in a townhouse. I don't mind saying this in public. I think it's a terrible rule. My realtor doesn't like it. None of the realtors like it, and I certainly didn't like it. If you're going to get the condo docs, look at them before you buy the house.
Yes.
And so the rule here is that the home buyer has 15 days to say whether or not they like the condo docs.
Ah, interesting.
And they can find anything wrong.
Sure.
They don't like the pool maintenance. They'll find something wrong and they try to back out. But
Right.
what this person did is wanted to renegotiate the price. And because she wanted a 30-day closing, I didn't have time to buy a place because the famous zip code where I live in order to buy the next house, you have to pay all cash. You can't use your pending proceeds to buy the next house.
Right.
It has to come out of the bank, anyway, we're talking about expensive homes.
Sure.
And so I said, okay, I'll rent. So I paid 2 months rent and blah, blah, blah. I arranged the movers to start packing. So out of the 30 days, we're 15 days in. And she said, I changed my mind. I want to offer the asking price. But because I have a wonderful real estate agent who I don't mind saying, this is what you're going to do. And between him and my lawyer, we patched it up and kind of met halfway.
Sure.
But I just want to end it by saying dozens of deals fall through because the home buyer or the buyer, it's not being handled with kid gloves.
Right.
And so when you anticipate little things like the real estate appraisal came in low, so the bank will lower the loan amount, and everybody's freaking out because they have to come up with an extra $10,000 or $20,000. Or the inspection comes back and everyone's freaking out because something needs to be fixed, and the seller closes their arms and said, I'm not fixing it. It's a leaky roof. And so it all comes down to how do you save the deal so that the seller can move on and the buyer can move in? That kind of has a nice ring to it.
Sure does. That sounds like a book title. What maybe your next book?
No, actually, I'm thinking my next book is going to be about condominiums.
Well, I live in one, so I will appreciate that.
I know. Well, Well, anyway, that's my little story. Yeah, but it was a fixer-upper, and I did a gut renovation. Everything. It took a whole year. The entire house was rebuilt, but I made some money off of it, and so now I'm going to move on to another venture 100 miles away from here.
Oh, exciting! Well,
yeah, back toward Boston, actually.
Well, back closer to home, I guess.
Yeah.
So, you had mentioned this idea of, as realtors or real estate agents, I really should say, having to walk this tight line between financial, we should point out that realtors are fiduciaries.
That's
and
right.
do have a financial obligation to do what is in their client's best interest. But they have to be realtors have to be very careful, of course, in not giving specific financial advice that would violate fair housing or violate the code of ethics. But at the same time, acting in their client's best interest. So you had mentioned, in your initial example, about how we look at the rates, or rather the clients often look at the rates because that's a tangible thing they can kind of lock into. High numbers bad, low numbers good. And yes, in general terms, I guess that's accurate. But then there's other nuances to it where you were mentioning, hey, if we look at traditional home appreciation, and past performance does not, of course, equal future results. However, we can use it as a guide to sort of say, how much extra is this actually, or would we project this maybe to be based on historical data? And that is really an interesting argument. I'm wondering if more realtors were educated to be able to have those conversations either with the client directly or with the lender to have with the client, that maybe that would get a lot of buyers off the fence who maybe are worried about these higher rates. Also, there's the whole cute saying, date the rate, marry the house. The idea that, the rate is what it is today, but the home is maybe is a longer term play, and there's a refinance possibility, depending on how things shake out with the Fed, in the future. So I think there's a literacy component here because right now here in Chicago, are at dangerously low inventory levels. We're only at, I
Yeah.
think we have 3 months or 4 months. We should have 10 or 11 months, I believe, would be a healthy market for us. And so there's a lot of people, there's not much inventory, and there's a lot of people sitting on the sidelines. There's a lot of sellers that are sitting on the sidelines, not wanting to give up their 3% mortgage too. Actually, I wanted to ask you about that. Let's switch to this issue of people being locked in, sort of golden handcuffed into their 3% rate. So that is a hard thing to give up. I know it's hard for me to even think, oh my gosh, if I sold my condo, even if it appreciated at like, for me then to go to even 6.5%, which is not unreasonable. I think that's a not terrible number but it's still certainly a less exciting number than 3%. So do we think this is going to create a bottleneck where we have 80 something percent or whatever the number is of homeowners currently are at under a 4% rate or wherever they're at? Do we think this is going to create just a stopgap in people wanting to move?
Yeah, well, the bottlenecking right now in real estate across the country has to do with sellers saying, where am I going to go?
Yeah.
And I don't want to give up my 2% or 3% mortgage and then have to get another mortgage. But I would like to suggest that you find the baby boomers. I am one, because I mean, do you really want to get a mortgage, a 30-year mortgage, when you're 65 or 70 years old? Ask your parents. And so if you're looking for, those single family detached homes with the little white picket fence, this is where you're going to see the most appreciation. Okay, so last year, the state of Illinois had an 8.4% annual rate of appreciation, which means $1 million home is growing at the rate of $80,000 a year.
That's a good year.
Yeah, that's a good year, but it has been over 5% nationally for 10 consecutive years. Okay, we're not seeing underwater mortgages very often. We're not seeing that. And so a very wealthy high-end neighborhood is going to have what I call, it's going to max out. And so let's just go to next year, 2025. And so let's just say that the average home in Cooks County is $750,000. And it's been appreciating at 7-8% a year. And your customers say, there's no way I can afford a $700,000 house. So the bargains are always going to be in the outlier communities. So you start to spread geographically. I mean, we have a saying in New England, every mile west of Boston, you save $1,000. And so you can almost use that as like an analogy. Just think of it as a radius around your city or your area. Now, if someone can get a house for $400,000 in this outlier area, I will tell you that house is going to appreciate in value at a higher rate
Right.
than the inner city, because people are only willing to spend so much on a condominium and a high rise in downtown Chicago.
Sure.
Okay. And they're only going to spend so much for a split level house that was built in the 70s that you think is kind of ugly. They don't want to spend $700,000 or $800,000 for that 70s architecture. But you may discover some, beautiful new homes, that have the rocking chair porch, or they have that kind of, what's popular for people today. Might even be smaller square footage. I mean, the National Builders Association has stated that square footage requirements have dropped 200 square feet over the past couple of years.
That's interesting.
Yeah, that has. And people you have to watch very closely to kind of avoid what was trendy 10 years ago.
Right.
I mean, I don't know about you, DJ, but people with toddlers don't exactly love sliding glass door, barn doors anymore. because your kids are sliding them back and forth all day
Sure.
long. And then the pandemic, drove everyone was working from home. Now it's more hybrid. And so you have two people living in a house that had what's called an open floor plan, which is still very popular and it's wonderful. But there's no place to sit in the corner with your computer, right? And so now the open floor plan is starting to be less popular.
Yeah.
And so my advice to home buyers is it doesn't matter whether you are buying, financing, renovating, decorating, or landscaping your house. The final decision has to be yours. So a lot of people are decorating their homes because they're following an influencer who says they're a decorator expert because they've got, 10,000 followers on Instagram. That's not the reason to paint, to do what you call a motif wall. Spend $5,000 on a custom painted forest on one side. And I, when I renovated my house 3 years ago, which I just sold it, I practically doubled my money on it. But my joke to my friends was, I'm not decorating. I'm decorating this for the next buyer. Light gray
Smart.
cabinets, and it was beautiful. The kitchen was gorgeous, but the point is, your home is an asset, and even if you live in it for 30 years, and hopefully you do, it is still an asset that needs to be protected. And as realtors, you all know that if you over improve or get carried away with your customized decorating, it won't sell.
And also, too, whatever is trendy today is not going to be trendy in 12 years. I have all white everything because that's what was cool
That's
3 years ago, and maybe it still is. But there's going to be a time, let's say 10 years from now, when somebody walks in to buy my place and goes, everything's white. Why did anyone ever
I
think
know.
that was a good idea? And
I know.
and so it is one of those things that, if unless you're selling it today, if you're selling it today, then maybe, yeah, look at the trends if you can make some changes. But you're right, is really thinking about, yes, I need to be comfortable and happy in my own home, but this is also an asset. And I'm curious to get your thoughts on this, because I've heard financial advisors say this, that the home is really only an asset the day you sell it. And the day you sell it is really
I
when you
love
find
that.
out exactly what that asset is worth, right? Because number one, you
I
have to
know.
live somewhere. So that money's going to most likely, if it's a primary residence, go back in to another home. But also, it really, it's an asset that appreciates, but again, only to the level of the interest of the next buyer, right? So I think that
Well,
you're bringing up a good point, is really looking forward as a realtor. We need to really be, I think, mindful to talk to our buyers in particular about how to really preserve this home so that it does become an asset that's more valuable, or at least the
that's right.
internal components of it could be possibly seen as more valuable than if other changes were made.
Well, you have to think like an appraiser. An appraiser is going to go through a house, and let's just say there are 7 or 8 major parts. And when he's doing his comparison and he's doing his analysis, one improvement needs to be within a 10% limit. In other words, I'll give you an example. Somebody buys a house for $300,000 and then they spend $30,000 on an in-ground pool. But they don't upgrade their furnace, they don't upgrade their electricity, and the house needs a roof. The house never had any real landscaping. And so when the appraiser appraises the house, let's just say a couple of years down the road, he uses a basis, an adjustment on his appraisal says the house is worth $7,000 more because of the in-ground pool. And the buyer or the seller is saying, "Are you kidding me? I spent $30,000 on that pool." But $30,000 was, say, 20% of the value of the house. So technically, it's considered an over improvement. And
Right.
you know what I mean? It's like putting in $150,000 kitchen on a $300,000 house, and because you want it modeled that after the Bear television show, and you put on this huge, double-sized stove. Everything is silver. Even the walls and the cabinets
Yeah.
are stainless steel, which to me looks like a hospital. But there are people who do that. And then when they go to list the house with a realtor, it says, all right, house is worth $300,000. Yeah, but I spent $100,000 on my kitchen. But when the appraiser comes by, they're only going to increase it by the level of which the Energy Star appliances were installed. The basement was either finished or it wasn't finished. Even if you have a custom bar with built-in bar stools and a built-in aquarium, it's not going to make the house go up in value. And so I think what people need to understand is, as you say, DJ, it is an asset, but property improvements need to be in the middle of the road.
Commensurate
they
with
need to be incremental. It's like built-ins. Yeah. I won't look at a house that has 1 million built-ins because I have furniture. I would rather look at furniture and I
am so sorry. There is
okay.
if there is noise going by, we have the Chicago Air and Water Show is this weekend. I wasn't sure that noise. They're practicing right now, and I am so sorry. I saw your eyes, and I went, I hope. So I'm going to mute if that happens again.
Don't worry.
We've been listening. We're right in Lincoln Park, and they are zooming overhead, and so I apologize.
Oh my God,
for that
Lincoln
noise.
Park.
Yeah. So anyway, sorry. Go ahead. I apologize.
No, I forget what I was saying actually.
Well, we were saying that improvements need to be sort of commensurate with
the whole package. It's what I can never understand is how often you see a $40 million home get listed on the market that was bought by a billionaire and they never lived there, and you think, why do people even bother? I mean, how many buyers out there can afford a $40 million home? But I want to say something else too, because my book is about discrimination. My whole practice, my auditing business was about discrimination, and I often get asked about unintentional bias and unconscious bias. Yeah. And so, DJ, we've been talking about how realtors can be a trusted advisor without crossing that line of giving advice, just helping people understand the process. But I want to tell you that the reason why we have a 49% mortgage fallout rate in America. So out of 25 to 30 million mortgage applications that are taken, only 15 or 16 million each year result in a closing. Now, this includes 2021 when interest rates were below 3%. It includes 2022 and 2023. So what I learned in the million loans that my office audited and the 10,000 students that I had in Detroit, Miami, LA, in Louisiana, and in Arizona, this is what my takeaway was from what I have seen in my own professional practice, that people are too shy. And you hit upon that earlier, DJ. They're too shy because they don't want to rock the boat. Because people, from the time they went to, well, I'm talking about Rosa Parks when she was in kindergarten, okay? From the time that people are little, they're used to some form of unintentional bias or unconscious bias. So then when they go to high school, they sense that kind of a bias. So they have a little bit on guard. And then it happens when they're on the business world. And so when people are buying a house, they don't want to make waves because they're so happy. So one of the projects, because my office did a lot of fraud projects, and predatory lending projects. So we analyzed about 10,000 loans that were all Hispanic borrowers in Southern California and in Arizona and New Mexico shortly after the 2008 crisis. So we did this work 2009, 2010. And so after we did our analysis, this is what we found, that the majority of the borrowers had high credit scores. They had W-2 forms in their file. They had good wages, yet they got subprime loans.
Hmm.
So what I gleaned from that project that we worked on is that people don't want to make waves. If the mortgage lender says, "Oh, I got a 9% mortgage program for you," they say, "Okay," because of that unintentional bias.
Sure.
And so they're so happy that someone is selling them a home. They don't want to rock the boat. And so I say speak up and self-advocate because, I mean, as a nation, we have to stop letting that happen.
I remember suggestion I have, and I'm curious to get your thoughts about uncovering one's own unconscious bias. I saw a 60 Minutes piece years and years ago that I want to say was one of the Ivy League schools, let's say Harvard, or it might not be Harvard, but someone developed a very quick computer program that would rapid fire ask questions, and before your conscious mind could really get a grasp of how we think we should answer the question, the idea was
I
that
do
you would be
remember that.
answering it just before you get to that. Wait, is this going to make me sound good or bad? And because I saw this study or saw this news piece and I thought, well, I don't think any less of women, of minorities. I must be completely neutral, and this test is going to prove them wrong. And I took the test and it said, you tend to think men are smarter than women. And I was like, no. But that's what the test said. And that certain races, you think that they're less intelligent. And I went, no. But there it was. It was there. And again, we all have these is the point. And I thought, boy, I think it's really a good idea for all of us to really understand where we have those, little unconscious glitches. It's nothing to be ashamed of, but it's something to know so that we can make adjustments in our conscious behavior. And I'm curious if you have thoughts about that.
Yeah. Well, first of all, I don't know if that Ivy League test was, beta tested, so they really found out the accuracy on that.
Sure.
But there are a few politicians that I would love to see how they do on that test.
Well, sure.
But anyway, what I have my own saying, because out of all the research that I've done, and that is unintentional bias isn't about what somebody says or does. It's about how the person feels.
Yeah.
So when, people as a general rule are not being discriminating. And that's why one of the biggest banks in America and the largest federal credit union in America were both absolutely 100% adamant. We didn't discriminate against these borrowers. We didn't discriminate. But what they're not understanding what the financial regulators are saying. What the Department of Justice is saying, you have to stop ignoring people. You have to stop neglecting people. So one of the things that I uncovered in my studies as an auditor and also my own research is that there are tens of thousands of people who applied for a loan and they never heard back from the bank. And then all of a sudden, 30 days later, they get a letter saying, "We closed your file for incompleteness." And I would like to say that I like to group together lower income households, non-citizens, Hispanics, Blacks, and multiracial people, Asians, as what we refer to as a minority. They have a protected basis. Because all of these people have one thing in common. When they're being ignored by a financial institution or any other organization, they think it's because they're not wealthy. They don't have white privilege. They think it's because they don't have a lot of money, or they think it's because they're buying a home in a less expensive neighborhood. This is how they are feeling.
I
But
don't
no, but
deserve
no, but
additional services because I'm
yes.
less than, because I don't have as much as someone else.
I'm not a rich white guy. And
Yeah,
all people who have a non-traditional household structure also feel the same way.
sure.
So so what I'm saying is that unintentional bias, sometimes there's no conversation verbally that is taking place between the organization and the consumer. So the unconscious is the fact that no one is showing in the mortgage lending industry, a fair lending law says that the bank or the mortgage lender has to express a willingness to lend. And that is demonstrated through positive information at every point of communication. From the time you pick up that phone and say hello until you shake someone's hand when they walk out of the closing. You can't promise they're going to get approved. You can't promise the rates aren't going to change, but you can promise that you'll give them good customer service. And you have to stick to that promise, because when people stop calling, or they stop, they don't call you and say, we're still waiting for your pay stub. It's not up to the buyer to know
Right.
everything they're supposed to provide. They can say, why didn't you tell me that 3 weeks ago?
There's nothing more frustrating going through the lending process than 3 weeks in getting a notice saying, "Oh, we need this one extra thing." Like, you clearly could have. It
That's right.
seems to me. I don't think these are evil people that are trying to screw anyone over, but this is something that there is some sort of gap in. It's happened to me. It's happened. I have an S corporation. That's
Me
something
too.
else which can be very tricky. It's not. Once lenders understand that there's an S corporation, and you can get past it. But it looks on paper that I am not a good person to lend to for certain price points, because I pay myself a lower salary because I own this company, and et cetera. And
Mm.
that was something that was not explained to me. And it was like, eventually we got through it. But boy, I would have loved to. And every time I go to refinance, I go through this. And there's always documents that don't seem to be needed right away and seem to be needed 3 weeks later. You're absolutely right.
Yeah. Well, also, you have a lot of home buyers out there who they make an offer on a house and they apply for a mortgage in good faith. They have a landlord that they assume in good faith is going to give them a good reference, saying they paid on time every month for the past 2 or 3 years. And then a month later, when the lender sends out a verification of rent, the landlord says, I'm not filling out this form. Well, why not? They just don't like signing forms.
Yeah.
And that is sad, but it happens. Then you have people who get child support, and they have an ex-husband who's jealous or upset that the person is buying a house, and the borrower says, I need you to give me a copy of your statements to prove that you've been giving me this $100 a week all these years. And the guy says, I'm not giving you anything. Okay.
Right. Yeah.
You
I'm
know,
still bitter about the divorce or
that's
whatever.
right.
Yeah.
And I'll give you another scenario. Your roommate from college, after you graduate, you get an apartment and you take turns paying rent, or
Right.
every month one of you pays half the rent. And then you part ways, or you come in one day and you announce, guess what? I'm getting married, and my fiance and I just bought a house. The roommate's just so happy for you, right? So the mortgage lender says, I need to have proof that the rent was paid on time the past 15 to 18 months, 2 years, whatever you got, give it to me. And the soon to be ex roommate says, I'm not giving you a thing.
Right.
And so, yeah, it's like these bridesmaid stories. It's almost the same thing when people are buying a house. They expect that those people that are providing them with documentation are going to be cooperative. Doesn't
Right.
always happen. Um, and the same thing happens when the property appraiser comes and finds something broken. And the seller was so nice. The seller offered you cookies every time you came by. Oh, you guys are going to love our house. We had so many happy memories here, blah, blah, blah. And then when you find out that there's an electrical, it's $1,500 because the electricity is illegal and needs to be brought up to grade. She slams the door on the realtor's face, saying, "Call my lawyer."
Right.
Okay, all of these things, emotions can affect, make people lose deals. And so I guess I'm kind of giving you a lot of examples. When we're dealing with artificial intelligence, nothing is captured except the person's income, their debt ratio, what they're paying for the house location. It doesn't capture irregular income. It doesn't capture self employment income. There are people working in farms and ranches and domestic households. There are people driving Uber by day and they're working at Home Depot at night. They've saved $40,000 to buy a house. And the lender is looking for wage documentation, and your borrower is saying, "It's in my phone. I get paid through Venmo." They don't
Right.
have pay stubs for these jobs. And so this is what's falling through the cracks and hurting the home buying industry, is that decision modeling systems are great for those people who have had the same job for 5 years, have all their money in one bank, they have, credit scores that are high. Those are, I'm not going to say they're half the buyers in America, or maybe 60 or 70%, but a third of Americans are non salaried. And a lot of people are getting grants, they're getting down payment assistance, they're getting funds from their relatives. And your AI systems, the algorithm is only picking up the generic transactions. Okay, it's not picking up the prepaid points that are being paid by the seller. It's not picking up, other incentives that may be included in the transaction. And so it's showing that you're short for closing funds. And then the AI system is spitting out a letter saying subject to sufficient funds to close, no less than $7,100, and it was rolled into the mortgage, right?
Yep.
And so all of these little things leave people in terms of bewilderment, distress, and unless they've locked in their rate and have a firm commitment, if there's a mortgage contingency, they will get their deposit back, and then your deal dies.
Right.
So,
I, I'd like so
yeah.
the book, by the way, is Closing the Gap in Home Ownership, Rewriting the Rules Against Mortgage Discrimination. I would love, you have a chapter in your book on lost opportunities.
Oh,
Tell us
yeah. Okay.
what are these
Here's
lost
my book.
opportunities, and
Here's my book.
what what can we do about them?
I am so glad you brought that up because I completely forgot about it. It's one of my favorite chapters. I call it lost opportunities because, of course, the most important opportunity is the one that you can quantify, and that is the appreciation, the future appreciation of your home. But the opportunities that cannot be quantified is the fact that we have 80 million people in America that are renting in apartment buildings and their families are sick because indoor air quality. And so the United States Department of Energy did a study. The International Energy Association did a study. The tenants in these buildings have no control over their indoor air quality. So all of these harmful things are and bacteria are floating through and they're going from unit to unit. And so when people are able to get into their own home, they get healthier and they get happier.
Mm.
The other lost opportunity is the fact that we have a law that was passed 2 years ago called the Inflation Reduction Act. Just so you know, Kamala Harris was the architect behind that new law. And so let's just say that you buy a house and you do $30,000 worth of energy improvements, such as solar panels. But you didn't take that $30,000 out of the bank, which you don't have probably. You got it on an interest-free loan from the state of Illinois.
Yeah.
Okay, so then when you have a new HVAC system installed, or you have your electrical upgrade, or you get those solar panels, or you get a charging station for your electric car, or whatever it is that you do, up to 30% of what you spent is called a bottom line dollar for dollar tax credit. And so if you spend $30,000, you probably have $8,000 to $9,000 subtracted from whatever you owe in your taxes. Now that law is still in effect. It covers everything. Insulation, it covers energy inspections. Now, the third lost opportunity I want to talk about is that according to Harvard University, there are 5.5 million people in America that are at risk to a weather-related disasters. As you know, we have hurricanes, we have flooding. Now, I don't know about you, but people who live in an apartment building don't have their landlord say, "Oh, you don't have to pay your rent for 6 months because I know you have to clean up this water problem." But Fannie Mae and Freddie Mac simultaneously issued letters about a year and a half ago saying that any of their loans any mortgage in America that was sold to Fannie Mae or Freddie Mac, all mortgage services automatically have permission to put the payment on pause for a weather-related disaster. And so the so Fannie Mae's DeSimone recovery network has to verify what the terms and the situation is of the disaster. And so what the home buyer gets to do is they call someone on the phone. It's available in different languages. They explain the situation. Their payments are put on paused. And depending on the severity of the situation, they could get their payments paused for 12 months, possibly 24 months. But listen to this. The counselors that are working, it's called Project Porchlight. And so the people that are working for Fannie Mae and Freddie Mac and HUD are trained to help people with a financial disaster if somebody loses a job, somebody is sick in the household. They can't promise you, all right, we're going to put your loan in forbearance, but they will listen to everyone. And they actually help with processing the payments for flood insurance. They are trusted advocates. And so there isn't anyone that gets this kind of service unless they are a homeowner, which is why I call it lost opportunities.
I love that. And I, just sort of to wrap up, I'd love to know some action steps that you think our audience and realtors could take to really help assist their clients through this process and really close that home ownership gap.
Okay. Well, in my book, I have a whole page with step-by-step instructions on how to Google your way through your city or town to find out what the town is giving back to its community. So real estate people are out there paving the pavement, boots on the ground, right? So whatever your so-called territory is, you go on the internet and you look up the housing divisions. You Google home buyer grants. But here's what you're going to find out. Is not only do most municipalities in America on a small basis, city, town, or county, parish, if you're in the South, certain states, what they do is they have incentives for people. And yeah, sometimes they're limited by income, but the income levels are pretty high and a lot of people are qualified. But these cities and towns also have services for veterans. They have services, free grants for building handicap accessory units. You're going to learn about what the town gives back to its people when they're buying a house and after they live in it. And so I say start Googling your way through what incentives are available for your customers. And also check out Freddie Mac DPA1, which stands for Down Payment Assistance .1. And sometimes the information is limited to lenders, but put up a big fight and say, look, I want this information. There are ways to find out ahead of time, especially on the Freddie Mac website. And you should find out in advance what down payment assistance is available. You do not have to have an offer in on a house. You do not need a specific address for someone to come back and say, okay, now I can tell you whether or not it's available. That's not true. And also HUD has a directory.
Yeah, I think that's really smart too. And then this also, really, we're talking about realtors educating themselves on sort of non-traditional options that maybe apply to certain groups that maybe they haven't yet worked with, or certain demographic
Yes.
people that fall into certain demographics or geographics. But there's also, we're talking about kind of understanding the alternative options that exist. And again, I am technically an employee of my own company, but do I really understand, lending with when somebody has an S corporation? Not really. So even I would have to, I think this is a great opportunity to partner with a lender as well, who's well versed in some of these, grants, and really, I think this is an opportunity to create education around. I see people, agents, successful realtors doing, so you want to buy your first home kind of webinars,
Right.
and they partner with other experts. And you do seem, at least here in Chicago, I go to some of these and I do see, it seems to me to be a lot of minority people attending, people who maybe haven't purchased their first home. They seem to be super interested and asking a lot of questions. And it's really encouraging to see agents who are doing that, because they're certainly, and I appreciate also the consumer who's like, I want to learn, but they have to learn from somebody. And I think maybe becoming that knowledge source,
Yeah.
or at least
Yeah.
aligning yourself with those knowledge sources, seems to be a really great idea. And I wanted to just, I would be remiss wrapping up. I wanted to ask you a little bit, just, I know you could talk about this for probably a very long time, but
Yeah.
any thoughts
True.
about the NAR settlement? Not so much
Oh,
in
yeah.
whether you like it or not, but where do you think it's going to push our industry? Do you have any thoughts of, what you think might be what might start to happen as a result of some of the new changes?
Well, it is not helping to close the home ownership gap, because people are not going to start knocking on the door and saying, "Can I buy your house?" I mean, that's just not going to happen. I've seen a little bit written on this. I think that Fannie Mae and Freddie Mac, FHA, and VA is 0% down, but I think that some allowances are going to be made for the buyer broker fee, whether it's the buyer agent fee, I should say, whether it's 2%, 1.5%, 2.5%, whatever that fee is, as long as it's disclosed. I have a feeling that it will be netted out from what the house needs to appraise at. I think that there'll be a few adjustments that have to be made, but I mean, you're familiar with the fact that when people get a mortgage with minimum down, they have to have 2 or 3 months payment reserves.
Sure.
That has always been a stretch for people. An
Sure.
extra $5,000 or $10,000 in the bank. But if you're buying a house for $400,000 and your buyer agent fee is going to be $8,000, there's no way you're going to be able to afford a down payment, closing costs, reserves, and that fee. So I think what you're going to see is rolling it into the cost of the mortgage is one option. It's like financing the points. But I also think, we're talking about a 50-50 MLS system that worked very nicely for 40 years. And out of nowhere, it's completely changed. And I know when I sold my house, I mean, my broker got a $60,000 commission because nobody was going to change the way they do anything where I live.
Sure.
And even though the house sold in an hour, there's no discounts, no open house either, nothing. So yeah, it was was it 5% or 6%? No, I can't remember. I think it was 5%. So I think that what you're going to see is that after a while, when I'm quoting technology here, it's an old IBM comment. When things don't work as smoothly as was expected, after a while, people go back to doing things the old way, right? If it doesn't broke, it's not broken, don't fix it. I don't think that, I know it's a new rule going into place, but my gut feeling is that it's not going to be around forever. I think it's going to hurt the industry. I mean, I wrote the book, but everyone across the country is doing everything to help close the racial gap in home ownership. And this new rule is doing the opposite.
Yeah, it's certainly making it harder for lower income people to be able to afford their first home.
It's not just that, it's the whole concept of, it just doesn't really make any sense. I think that somebody in their evil mastermind thought that Redfin and Zillow and all of the online companies were going to be the primary, we're going to disrupt the market as digital disruption. People can buy a home virtually, and we all know
that hasn't really happened. Yeah.
If you talk to some appraisers, or real estate appraisal is almost like a what do they call those personal descriptions on a dating site? Everybody is in great condition and they're athletic and they work out and they're gorgeous, right? While a real estate appraiser will write up the house the same way.
Sure.
And so, to have a virtual business for buying and selling is not always good.
Yeah.
So, okay.
All right. Well, the book again is Closing the Gap in Home Ownership, Rewriting the Rules Against Mortgage Discrimination. It is available everywhere books are sold, specifically for free right now on Amazon. If you have Amazon Prime or a Kindle, I believe it's currently free. So please check this out. Anna DeSimone is a sought after expert in housing discrimination and lending practices, and she is often the expert that the experts go to for really trying to correct some of the inequities that we're seeing. So Anna, on behalf of our audience, thank you for doing good work. Of course, we are so honored to have you on the show. Behalf of the audience, thank you. And on behalf of Anna and myself, we want to thank the audience as well. Oh, by the way, go to Anna's website, annadesimone.net. You can learn about all of her work, and you can learn about her and connect with her if you have maybe
send me an
you'd
email.
like. Yeah, shoot her a
question.
message.
Yeah.
For any questions or comments, reach out to her, AnnaDeSimone.net. We'll have a link to that in the show notes. Anna, it was a pleasure. And I
No,
would
I
just
loved it.
well, thank you
Yeah.
so much. And also, before everybody jumps off, please, we ask you just do one thing to help us, which is to tell a friend about this show. Think of one other realtor that could benefit from hearing this great conversation with Anna, and shoot them a link over either to our website, which is keepingitrealpod.com. They can listen right from their browser, or if they listen to podcasts, they can just go to any podcast app, search for Keeping It Real, hit that subscribe button. And if you are a regular listener to us, thank you. And please leave us a review. Let us know what you think of the show. Let us know what we could do to improve. We're here to serve you. And so thank you in advance for that. Anna, it was such a pleasure.
It was a pleasure. Yeah.
Well, enjoy your temporary rental, and excited that you're getting to move back east. But enjoy your time in Connecticut.
Thank you,
Anna. Thank